Why is gold suddenly becoming one of the most talked about assets in the world again? In the next few minutes, I'm going to explain why gold prices have been rising recently, what's really behind this surge, and what it actually means for you, your money, your investments, and even everyday prices. No complicated economic language, just the real story in a way that makes sense. If you've seen the news lately, you've probably noticed headlines about gold climbing, hitting new highs, or getting close to record levels. And every time that happens, people start paying attention. Gold doesn't usually move dramatically for no reason. When it rises strongly, it's often reacting to something bigger happening in the world. Recently, we've been living in a period filled with uncertainty. There are geopolitical tensions between major countries. There are ongoing conflicts. There are trade disputes. There are questions about inflation and economic slowdowns. And at the same time, central banks, the institutions that manage national reserves, have been buying large amounts of gold. That combination matters, because gold doesn't produce anything. It doesn't generate income. It doesn't grow like a company does. It just exists. So when people choose gold over other investments, that tells you something important. It usually means they're looking for safety. Let's understand why. Gold has been trusted for thousands of years. Long before modern banking systems, before stock markets, before digital currencies, gold was considered valuable. It was durable, scarce, and widely accepted. That deep historical trust still exists today. So when the world feels stable, people prefer assets that grow, businesses, innovation, technology, real estate. But when uncertainty increases, people want protection. They want something that isn't directly tied to one country's economy or one company's performance. That's where gold comes in. Now let's talk about why gold has been rising recently. First reason, global uncertainty. Whenever there are political tensions, military conflicts, or instability between major powers, investors become cautious. They reduce exposure to risk and move toward assets perceived as safe. Gold benefits from that shift. Second reason, inflation concerns. If people believe that money is losing purchasing power over time, they look for assets that can hold value better. Gold has historically been seen as protection against inflation. So when inflation fears increase, demand for gold often increases as well. Third reason, central banks buying more gold. Many countries hold large reserves in foreign currencies, especially the US dollar. But in recent years, several central banks have increased their gold reserves. When large institutions buy significant amounts of gold, that adds steady demand to the market. And it also sends a signal. It suggests they want diversification. They may want less dependence on a single currency. That makes private investors pay attention and sometimes follow the same strategy. Fourth reason, expectations about interest rates. Gold doesn't pay interest, so when interest rates are high, investors might prefer savings accounts or bonds that generate income. But when markets expect interest rates to fall, gold becomes relatively more attractive because the cost of holding it decreases. If investors believe central banks will reduce rates, gold often benefits. Now here's something important. Gold doesn't move in isolation. When gold rises sharply, it often reflects caution in other markets. It doesn't automatically mean a crisis is coming, but it usually means investors are nervous. If gold climbs because of geopolitical tensions, stock markets may experience more volatility. If gold rises because of inflation fears, that same inflation may affect everyday goods and services. If gold rises because investors expect economic slowdown, job markets, and business growth might feel pressure. Gold is like a thermometer. It doesn't cause the fever. It shows that something is happening. Now let's make this personal. You might be thinking, okay, but I don't own gold. Why should I care? Because gold reflects global confidence. If global tensions increase and investors move into gold, that same tension might disrupt supply chains. That can increase energy prices. Higher energy prices can increase transportation costs. That can make food and consumer goods more expensive. If gold is rising because investors fear inflation, that inflation may show up in your rent, your groceries, or your insurance. If gold is rising because markets expect slower growth, that environment may affect job stability or business investments. Even if you never buy gold, you live in the system that gold is reacting to. Now let's be clear about something. Gold is not magic. It doesn't always go up. It doesn't always outperform other investments. During strong economic expansion, stock markets often perform better than gold. Businesses grow, profits increase, and optimism drives markets higher. In those periods, gold may lag behind. Gold's strength appears during uncertainty. It shines when confidence fades. That's why you often see it surge during crises or unstable periods. Let's look at a few simple everyday examples. Imagine rising global tensions affecting oil production. Investors get nervous. Gold rises. At the same time, oil prices climb. Transportation becomes more expensive. Grocery prices rise. You feel it directly at the store. Or imagine markets fearing inflation. Investors buy gold as protection. Meanwhile, everyday goods gradually cost more. Your monthly expenses increase. Or imagine economic slowdown concerns. Investors move from stocks to gold. Stock markets fluctuate more. Your retirement account balance becomes more volatile. Gold doesn't directly cause these effects, but it often moves alongside the forces that do. So what does this recent surge really tell us? It tells us that uncertainty is elevated. It tells us that investors want protection. It tells us that large institutions are diversifying. And it tells us that confidence isn't as strong as it might appear on the surface. Now let's simplify everything into 3 clear points. First, gold rises when uncertainty rises. Second, the recent increase is driven by global tensions, inflation concerns, central bank buying, and expectations about interest rates. Third, gold acts as a signal. It reflects deeper forces shaping the economy, forces that can affect prices, investments, and financial stability. Gold isn't just a shiny metal sitting in a vault. It's a global confidence indicator, and when it moves strongly, it's worth paying attention. If you found this helpful, and you enjoy simple explanations of complex global trends, subscribe to the channel. Next, we're going to explore whether central banks might be preparing for a bigger shift in the global financial system, and what that could mean for currencies and markets worldwide. You won't want to miss that.